Crypto clampdown. This is what we were talking about last week. It's all over. The SEC clamping down on crypto. Now, of course, I jest a little bit. If you watched our last episode, we realize there's a lot more nuance to that. But look what we have here this week, Sam. 5 Bitcoin ETF applications in 5 days. Blackrock start the ball rolling. They've got somewhere between 10 and 11 trillion dollars worth of assets under their management. Fidelity, Invesco, Wisdom Tree, Valkyrie, the big players coming into the market. But last week, it seemed like it was all over clamping down on crypto. We said before we started this, you have to almost laugh at this because, you know, the emotional roller coaster that is being perpetuated by the news cycles around this is just hyperbolic. And we can probably see that in the shift of the kind of fear and greed index in the space of a week, going from last week, kind of from a relatively neutral, fear-based, bearish sentiment to a more greed-orientated, FOMO, bullish sentiment coming into this week around Bitcoin and various other assets, Sam. But it's been a bit of a crazy week. There's lots of things to unpack on today's episode.
Yeah, the clown show goes on, Dan. The roadmap I've been talking about keeps playing out. It's speeding up. And again, yeah, like the flip-flopping and the kind of time frames of the narratives are comical. I mean, ridiculous, really. And again, you said clamp down, but is it clamp down on crypto or is it clamp down on smaller players? Clamp down on people who aren't necessarily in the biggest clubs. So, you know, we see that clamp down, but then we see TradFi, traditional finance, all the legacy players suddenly start amassing. So, you know, we actually saw that, you know, the fear, uncertainty, doubt, the FUD, which dropped Bitcoin down to $25,000, you know, on the news of the SEC going after Coinbase and Binance for being, you know, in their view, unlicensed brokers dealing in securities. And then we see, you know, within a matter of days, you know, BlackRock, Fidelity, all the big players, Citadel coming in saying, you know, let's get on the Bitcoin bandwagon. This is where we need to be, position ourselves. So again, it's very predictable. But again, this one was a really quick turnaround. It's even more comical than a lot of the roadmap I've been watching. And, you know, as we know, what's frustrating in the mainstream is, you know, hopefully more and more people down are catching up the idea that the news cycle is ridiculous. But when you see how quickly things are able to change, and I think what they play on is so many people forget and understand that they're busy with their lives, forget that in, you know, November when we had, you know, the FTX collapse, which again we've discussed in an earlier podcast, be an inside job, all part of the same shenanigans. You know, that was the death of crypto. That was the end. And now we see the same people, you know, who are announcing the end and telling you it's all a scam. We told you so. And now saying, you know, we're getting funds together based around these asset class. We're building all these structures. So again, it's ridiculous, but that's how the news cycle works, and doesn't it? They can say something and then say something completely contrarian with it, and it's seemingly in an even shorter time frame than they used to. You know, and I think this one we've seen sort of contrarian things coming in within the matter of 48 hours, 72 hours. So it is getting almost more ridiculous. And we touched on it before. Yeah. It's almost like I feel we're reaching sort of, you know, I know through COVID we were at peak clown, but you could argue peak clown world, but we're continuing, you know, when I saw the news come across my radar of, you know, whatever we think of them, I don't think very hard of them personally, but whatever anybody thinks of them, you know, Musk and Zuckerberg, you'd have the idea, even in mainstream world, these are innovators, interesting people looking at solutions, and the big news is they want to get together in a cage fight, you know, this week or whatever. So this is to me the kind of nonsensical, comical level we're at. And, you know, again, we're here to demystify it down, look at it, analyze it, but as always, keep ourselves grounded and almost, you know, distance ourselves from it at the same time. I think that's always important, isn't it? That we're seeing it, but we keep our sanity and not get too sucked into it. So that's always the challenge.
It's so important. Yeah. The tricky part is that you're absolutely right. Is that in within the machinery of where a lot of these sources come from, that we can learn about positive things as well as the clown world. And I like the clown. Maybe we need a clown indicator. You know, we've got the fear and greed indicator.
Yeah.
You know, what level of 1 to 100 is the clown world on?
We're into the 80s this week, Dan. We're clown 80s.
The 80s. Yeah, high levels of clown. Interesting enough, I was at an event last night which talked about the censorship industrial complex with Michael Schellenberger and Matt Taibbi, and they've been involved in the Twitter files and the testimony in the US around this. And Matt Taibbi last night said that the censorship industrial complex has constructed what he described as a news consumer who is either who only feels complete enthusiasm for a particular cause, like raving, frothing at the mouth enthusiasm, or total disgust. It's like one or the other. It's been completely constructed. So it's like this complete yin and yang spectrum of emotions, which creates a really divided perception on anything, but it creates really extreme positions on things. And I think those conditions create the opportunity for this kind of clown world media circus that we live within, that becomes overly sensationalized, hyperbolic, and it really creates this emotional roller coaster that actually people thrive on. Actually our monkey mind, our chimp mind, kind of responds in this way. And actually, if you associate that with the marketplace, the crypto marketplace, that's why there's such volatility amongst other factors. It's not simply the lack of regulation that will be led to believe is the reason why it's volatile. It's actually the circus around it that drives a lot of this.
Yeah, so I'm glad you brought that point up, Dan, because we've often touched on it, those binaries and those extremes and the middle ground. And I don't mean that as in a compromised middle ground, but the middle sort of grey areas of nuance and that take a lot of work. Understandably, like you said, people have been fed that and then they become addicted to it. And there's a real dearth of, really good wisdom and grounded information that takes time to. And again, that roller coaster is draining. It's like a lot of these things that are addictive. They're actually draining your energy, and they don't lead to great productivity and moving things forward in a sustainable way. So yeah, it's no surprise they built that system. That's what we're seeing. Particularly us who have eyes slightly wider open to see than others, but it's becoming very obvious.
Yeah. So bringing us back to the kind of big boys coming in. Blackrock caught the headlines, and then very quickly, in quick succession, really, it was like they led the charge, and then they were followed by the various others that we talked about: Fidelity, Invesco, Wisdom Tree, Valkyrie, and others. Now, whether BlackRock's proposal will be accepted or not by the SEC is yet to be seen, but I've got some theories
around. Hit rate, haven't they, Dan? I mean,
they've got some theories around that.
Their batting average is pretty good, which suggests, I don't think it's a too far leap to suggest they've got friends in high places, or they are the friends in high places. So, potentially the pecking order, you kind of think they're asking the SEC, is it the other way round? How does that pecking order really stack up? But yeah, I think they've only been denied one out of their many hundreds. One. So they've got a pretty good batting average, and the timing is very interesting.
Yeah, and that was probably the summer intern. That time they got turned down. They thought they'd run a project for their management trainees or whatnot.
Well, it's possibly maybe it was it was actually a good idea that was going to benefit some people. Maybe that's why I didn't get through there.
Yeah. Now, obviously, none of these types of funds, ETFs in the US regarding crypto-based assets or digital assets have been approved yet. But in Asia earlier this year, Samsung launched Asia's first Bitcoin-based ETF. Not Samsung, the electronics, it's actually a subsidiary of the company, Samsung Asset Management, but it is a Samsung company. And they were successfully listed on the Futures on the Hong Kong Stock Exchange under a Futures Active ETF. And Hong Kong is the only market in Asia where Bitcoin futures ETFs are listed and traded in the institutional market. So they were actually one of the leaders in this, but it shows that there is clear appetite for institutional investment in this space. Now, the big players, the timing of this is questionable. Inside job comes to mind. There's a lot of questions being asked publicly around this. How do you have, literally, as we joked about at the beginning, that we have this news in 1 week, the SEC clamping down, and then the next week, quite literally within a week, starting to put forward these applications. It does start to feel like an inside job. But what does it really lead to? And, my research around this sadly took me to a place of an ultimate conclusion of a heavily regulated market where the same big actors, the big investment funds, the big financial institutions of today in the TradFi, we'll bring some jargon in the traditional finance world. That's not a tradable stock. Well, it is. You could probably find a fund that has all the. I don't think it'd be called TradFi, but it's I can envision a world where they are the intermediaries between the central banks. We could argue that central bank digital currencies may even be surplus to requirements in that kind of fashion. Although with the amount of money and effort being invested into central bank digital currencies, I think they are still a very pressing reality. Although they
totally,
may take,
Dan. Totally.
yeah,
Big news. I've been tracking this week some of the projects. Big news coming out. Project Rosalind with the Bank of International Settlements and the Bank of England. Big testing going on with various nations this week. So again, that is in motion. And speeding up with a lot of the kind of ISO 20022 compliant blockchain companies who are working with them. So things are ramping up at a pace, from what I'm seeing.
definitely. But what form that will take, I think, is unknown.
Yeah,
And the
totally.
European Union, talking about, it's classic deny, debate, deploy methodology, running amok here. No, we won't. We won't have programmable currencies. No, we won't deny. Step
Yeah.
one. Oh, but maybe we should think about it for the greater good and then deploy. We're in the deny phase at the minute, but
Totally, I heard the same thing from Jerome. I think it was Jerome Powell said the same thing, that we're absolutely not looking at CBDC for retail. We wouldn't do that. But we've heard we wouldn't do that in relation to many things over the last 3-4 years, haven't we? So there's absolutely no that holds no water, any of these statements, because that's again the comedy, clown, ridiculousness, and tragedy of it. That often you see these diametrically opposed quotes within 6 months, posted by the same person. I mean, completely flip flop. I mean, it's ridiculous. But I think, Dan, I wanted to pull up just a technicality for people who are not sort of understanding funds over, kind of direct trading crypto, and why, you alluded to there that have been futures traded funds on the crypto market. But the big difference is I'm trying to make it accessible to people who aren't got a background in finance, that is really like a gambling market on top of the market. So it's kind of, buying, selling contracts based on the future price of assets. It's not actually purchasing the asset. So there's no actual direct trading in the asset. And I think that's why this is such a huge development, and people have been talking about this for a long time. When will it come? This is a BTC spot ETF. And what that means is that rather than being, trading contracts, like paper contracts based on the future prices, people gambling on the rise or fall of the price of an asset, what happens here, this is actual exposure, and the fund actually will buy the asset. So in a sense, it's, absolutely people being involved in Bitcoin, but it's in a fund. And obviously what it's leading to is, Dan, is as we know, crypto is quite niche. A lot of people are scared by it. This is going through by the traditional method. In a sense, it's turning into a stock. And it's going through the same people used to go through brokers to a fund. Therefore, it gives access to institutions who can't come into the crypto space as it's unregulated for regulatory reasons, compliance reasons, but also for a huge swathe of investors who would be very nervous about entering the crypto market themselves and actually interacting with the assets themselves, because there's some technicality to it. So it's for people who want exposure to Bitcoin and the price of Bitcoin, but they're never actually going to hold it. It's held for them. So again, it goes against our whole, talk about crypto, about, holding your own assets, being in control. It's literally like creating a stock out of Bitcoin. But I suppose what's got a lot of price action this week is that the difference between that and the futures traded funds is that actually creates buy pressure on Bitcoin itself, because the fund will actually be buying Bitcoin. So that's why this is something that hasn't happened before, which is why this is much bigger news, a spot ETF, than the futures ETFs that already existed. I think it's important to make that distinction.
Really important, and thank you for making that distinction. I'll add a couple of points to what you've just shared as well. There's a survey by Laser Digital that came out, which looked at a number of different hedge funds, investment funds, pension funds, insurance companies, wealth funds, family offices, with close to $5 trillion under management, approximately half the size of what Blackrock hold. And it was a classic case of actual what's known as preference falsification, which is a term that is used to describe how someone's public representation of their views is different from what they actually believe.
Yeah.
And a good example of that is where you might take a certain political stance in the public realm on social media to make sure you conform with the in crowd, But then when you go to the voting booth, you actually vote in the opposite way to what you've actually been showing yourself to be. And we've seen loads of examples of that in the last few years where, people toe the line of the narrative to not be ostracized by the in crowd. They don't want to be part of the out group, but then they actually believe differently when you actually talk privately with them. And the same is true in this case, because a lot of these major institutions have publicly, as we talked about, as you alluded to previously, have been distancing themselves from digital assets and crypto. But this survey actually showed a very positive response. 96% of the respondents said that they view digital assets as a strong investment diversification opportunity in the long term. The vast majority had a very positive 12-month outlook on digital assets in general, especially Bitcoin and Ethereum. But here's where it gets interesting, to the point that you made, is that 90% of the professional investors polled said it was important to have the backing of large traditional financial institutions for any crypto asset fund or investment vehicle before they or their clients would consider putting money into it. So they're kind of sitting on the sidelines, waiting for mum and dad to come and make sure it's safe, for the big players to come in and pave the way. So, they've had this like kind of slightly negative and hands-off perception of digital publicly, and then in this survey actually showed a very different sentiment. And it's very clear that they're kind of waiting for the safety signals from the big players to come in to clear the way, to pave the way. Now, ultimately, as we've seen, that distinction you made is an important one. I'd like to add another point to this, because according to some sources, again, these major institutions since Q1 of this year have been buying up huge amounts of Bitcoin, massive acquisitions. And also many of these industry biggies have been purchasing huge amounts of MicroStrategy stocks, which is the largest institutional holder of Bitcoin. It's actually got around 140,000 Bitcoin, which is worth, at the time when I made the note, somewhere near $3 billion worth of.
So indirectly getting more exposure to Bitcoin, exactly through that.
More exposure to Bitcoin. So you've got the big players saying that they're going to their powder's ready to join. That they're ready to enter the market when the bigger boys come in, and then you've got these moves which show that there is, again, their actions are showing that they're actively entering into the market via various different means. Now, the point around BlackRock, yes, they've got a great batting average, but guess what? In terms of their proposal, a lot of the reasons why the SEC has previously rejected proposals is because of concerns around market manipulation. And again, that's a very valid concern, because for the retail investor, for people like you and I, we wouldn't want to fall foul of manipulation of the market. I think we would agree that those market moves are, they distort the free market principle. But BlackRock have included, to mitigate that, they've included this surveillance sharing agreement proposal, which means that they will allow for the sharing of information about market trading activity, including customer identification, of course, which would reduce the possibility of market manipulation. So they've worked in cahoots with NASDAQ on this in order to sweeten the deal for SEC. So if it's not enough on their clout alone, adding this surveillance element to the proposal, I think really much is going to whet the appetite. But also they're giving the SEC an easy route. They're actually giving them an easy pass. So again, your point around who is the tail wagging the dog. The reality is it probably is in this case, and they're giving the SEC an easy out by saying, well, this is going to bring greater stability to the market in lieu of regulation, because the SEC, by their own confession, is very manipulated. Very concerned. Not the SEC is very manipulated, based on my previous point, but they are concerned with market manipulation relating to digital asset prices, particularly Bitcoin, and this has been cited in almost all their previous rejections of such proposals. So, this is probably a factor that will play a role in the potential success of BlackRock's approval. But as quite rightly other critics have pointed out, that Kraken, Coinbase, etc., all of their data feeds are public. The SEC could clearly already get all these data points. They could. So they know every trade in every order. They can already get this, and the SEC can look at the patterns and say, you know what, this looks like a manipulative trade. So again, that element of centralization starts to clamp down on the pieces that threaten the incumbent powers, such as
Totally.
privacy element. So it drives the kind of KYC, and we could argue all those things are inevitability anyway, but it accelerates that path.
It does, and it's always driving, the kind of innovative smaller players who've maybe been pioneers in this space and championed it, and who comes in Wall Street and the big boys to clean up. And to mix the two terms, we introduce people to TradFi, but it's really TradFi looking to take hold of DeFi. And that's what we saw. In a sense, and again, that's why it's no surprise to me, because people have been listening to my talks or this podcast, or been on my course, or been in our group, have heard me talk about what happened to a lot of the big DeFi platforms and companies, which is really big insider trading from Wall Street came and pulled them down, did the old destroyed them, and then bailed them out and saved them. And often what you see is that these big boys, I've said it, I think, in other discussions we had, Dan, they're not particularly creative, but they're very efficient at what they do. They're efficient destroyers and gobblers up, aren't they? They are sharks in the water, literally. Whereas, what they're very clever at doing is allowing creative people to create interesting solutions and look at the tech and build that stuff, and then try and nick it off them or destroy them in the process and do it. So That's what's playing out. And again, the idea being, like exactly what you said there, that they could have found the transparency they needed through the existing players in the market. But in a sense, they've gone to say, well, rubbish them, they're out of the game, they're not compliant. We need to set up our own systems that do make this possible, rather than working with them, because it's about centralization of power. And that that leads us to the other big sort of development this week, which was the launch, the big players launching their own exchange.
Yes.
So you've got Fidelity, Charles Schwab, and Citadel coming up with a new. And again, this is all what I thought would happen in terms of the digital asset space going mainstream. So it's not a surprise, but a new exchange which solves all the fear and problems of people over the FTX. And again, I'd argue FTX was a setup for all this. And basically, using completely old system. And even in the quotes, it's people like, well, people want to use their trusted third-party brokers to be involved in this. So in a sense, how can we have our old system, no innovation, keep hold of the same powers, the same players, not the new innovative ones who could help you interact? And, so they have an exchange where they're not custodians of any crypto. The brokers and the banks hold it for you. They create a marketplace. But again, what this does is add another layer of, between you and your asset, which is what we're talking about decentralization. It's trying to shrink those layers of parasites or in-betweeners or people taking cuts. But of course, they just bring that whole same system into digital assets, which was always going to happen, but it's happened this week. So, I think it's called EDX Exchange, and it is, basically the old model, but let's do digital assets within that old model, completely the same. Whereas, the whole ethos of crypto is breaking out those models, as we know, and obviously there will be a huge swathe of people who will unsoundly, because it's, it takes effort to learn, who don't feel comfortable self-custodying, don't feel comfortable, trading themselves or even purchasing or learning new skills. And they will be corralled into this, sanitized, safe way where they're paying high fees and the same parasites between them and their assets. And they're not, and the key thing is, Dan, I've always said they're not in control, really. As we know, that's fine if everything's fine, but that's also, there's a gap between you and controlling your assets. And again, that's the beauty for people who do want to do a bit of learning and get all this. Part of the beauty of getting digital assets is that you can self-custody it, you can control your assets regardless of the third-party institutions, and you can decide how fit to move them and navigate. And that's, the building system where, again, the banks will hold them, you go through a broker. So it's all heading towards, and again, with that system, they can bring more controls in, because it could start off being very similar to what you have on those, crypto platforms, but through a broker. But then, of course, things could change where actually you need to have a certain amount of revenue to qualify. You need to have other caveats. You need to. So again, it's a road towards locking potentially smaller players out of the market, and they don't want everybody involved in this wealth transfer, or this shift, in a way that's completely free for anybody to participate at their own level. And I think that's this big shift we're seeing happen.
Yeah, I mean, in my prep for this episode, that was kind of the overarching conclusion. I know we're probably both of us, we sound like stuck records, because it's it's not a foregone conclusion, but I think there is an element of realism that shows that the incumbent financial structures and related power structures are just using this new technology to create. And then there's a whole thread of conversation around what that efficiencies will allow for the central institutions. The Swift system that everything's built on is still kind of akin to like a fax machine. Most people don't have these old sluggish technologies anymore. So, the ISO changes that we talked about in previous podcasts and some of the new technologies that underpin all this obviously do bring greater efficiencies. But ultimately, what's happening with the potential decentralized marketplace is that the central powers are coming and building a central wrapper around it all and using the efficiencies of the technologies to accelerate the development of their own tools and technologies around this, so they can dominate the marketplace. And it will just be it's almost like a rip and replace of the legacy systems. It's almost like a straight swap. All of the innovative players have come in, built this infrastructure, and then here we have another institution coming in. And I've got a quote here actually from the EDX CEO, which says, "We're committed to bringing the best of traditional finance to cryptocurrency markets with an infrastructure built by market experts to embed key institutional best practices," which I think summarizes perfectly what we've just discussed.
But what's come to me as we've discussed it, Dan, is that what it also leads to is the mass people, investors who go through that route will have no understanding of the underlying tech because they won't be interacting with it directly. It'll be very intangible. And again, that whatever we think of the tech and where it goes, they're not learning or evolving about it. It just becomes another financial product. So in a sense, yes, it becomes an investment vehicle, but they're not going to be educated or even by using it, understand its potentials, the other use cases, because that's the big point. They don't want to necessarily interact with it because they're scared of it, and they've been scared. They've been scared out of that as well, and they control the narrative around it. But equally, they're not going to be. That's the whole point. People have this ETF fund, or people who are just dealing with Bitcoin through brokers. They're not actually going to understand or necessarily need to understand anything. Think they're involved in Bitcoin, but they're not even. They're missing the whole point and what it's capable of doing. This almost brings up another question. There's so many angles, Dan. We always can go off, but I absolutely always accepted this. I've always talked about it. This will be a mainstream asset class because it is a future asset class. It's a nascent one, and it will go mainstream. So in terms of investment, that almost sense, the really curious, question is how will it play out in terms of these assets in a peer-to-peer use, rather than just an investment? Because that's always the big debate. People go, are you investing in something or using it? Now, I see benefits, and I've talked about this, often. I see the roadmap's so unsure, but I still see multiple benefits in different camps of being involved in this space. There is hedging the great reset of understanding this is where a lot of value is going, and do you want to benefit from that, shift and be an early pioneer? Because as you've said there, Dan, and I always say this is a $1 trillion market, and the big boys have got hundreds of trillions sitting on the sideline. This is a glass of water amongst an ocean of liquidity, literally, and a nascent asset class. You've got the aspect of potentially understand this is the future and getting in on that and benefiting from being an early adopter and learning a few things. But also you've got an asset that is decentralized that you can take in self-custody. And perhaps that window is, slightly closing, and we've watched that get tighter and we don't know how that's going to play out. But it may be heading more towards you've got to go through, or they want you to. I think they'll always say this. For the people who are motivated, there always will be ways, but it's getting harder and you've got to be more motivated. So there are multiple ways, because having some Bitcoin because you see there's going to be huge growth in it is one aspect, but also having some Bitcoin because you have got a decentralized form of exchange. It's very useful outside the system that isn't based on, what the state's doing. And I always say that, I've, in the past 3 years, I've spoken to people who it has saved them out of situations. I mean, we know people who've been debanked from other mainstream platforms who are able to transact, across borders regardless with Bitcoin. So I think it's always important to look at those different angles. There's so much to it. There is almost an important investment asset side to understand that digital assets are going to be huge and are going to grow enormously. And there is also the fact that you've got a store of value that you control, that you can transact with peer-to-peer. And understanding, I always say, it gives you more options. everyone wants to know how it's all going to play out. None of us can answer that. But you've got what I like, and I think a lot of people around me like, we like to have lots of options, Dan. And I think that's where, understanding that this isn't going away. It was never a scam. This is a huge part of the future. People vying for power struggle. It's a good time to learn about it and get clued up before they really, try and close the gates. I'd argue.
Yeah. It's so interesting. There's a lot in here. So your point around the institutional investors coming in, I know the finance world pretty well. I worked within it between 2005-ish to 2012, and often with these kind of big funds, there are access points. Meaning you need to have a minimum level of wealth before you can be involved in such a fund. And I think that will be true with these new funds that are coming through. I think there will be minimum levels of assets required to start investing in those types of funds, which will lock out. It's not restricting people from investing in those funds directly, but it's saying that if you don't have this level of wealth, then you can't play. But whilst I hold a level of realism around that, I'm also optimistic that the retail investor will still have opportunities to explore this market, but I think in a very heavy regulated fashion, which again will be very much like our existing the existing ways that the average retail investor can invest in stocks and shares or forex or other asset class. And I think technology again has liberated the ability for any individual to invest in those asset classes without going through mainstream brokers. It's become a possibility, and I hold out hope, strong hope, in fact, and very positive hope that will remain a possibility with digital assets and crypto assets. But again, as I mentioned, I think that'll be in a much more heavily regulated KYC fashion, because a lot of those tools in the traditional markets are, again, heavily regulated and KYC.
Totally, and the key aspect being that the ability to self-custody.
Yes.
That is critical in this path. That again, whether you're allowed to have exposure to it, but as part of a fund or whatever, then that's not the control we're looking for in terms of holding our own assets. And again, I view that even aside from KYC potential, that's another issue on top. But it's pure level. What we're talking about is having some level of control and taking it to our own self-custody, and so you're having direct interaction with your assets. That's critical. And I think that's what I'm saying, that a lot of these sort of bigger investors will not be interacting with the asset directly themselves. It will literally be a fund, and the risk of that, as we said, in a sense, that's where the state can turn you on and off. An institution can turn you on and off. A bank, that's that point, of not having, Bitcoin being seized was always Bitcoin being seized in third-party hands. We talk about the Canadian truckers, that scenario is often talked about. That was because it was in third-party hands. They froze accounts. But self-custody is what gives you, that sovereign aspect of holding it yourself and being in charge of your own asset, and that's critical. Otherwise, it does become a centralized, it's a centralized asset.
Yeah, but the other big piece of news of the big players coming into this market is that the German bank Deutsche Bank has applied for a license to custody crypto assets. This is the next big announcement that's made in terms of this space. Considering crypto custody to enable it, this is to quote, to offer an institutional grade hot cold storage solution with insurance grade protection. So, again, outside of the kind of funds, the kind of brokerage and the funds that you're talking about, institutional banks coming in to create custodial solutions, how will that shift things? Will that alter the market? And again, to caveat all of these things, part of the reason why Bitcoin is on an uptick at the minute in a bullish trend is because the market has responded favorably to the big boys coming in. Yeah. Because again, it plays to its long-term security and viability. So there's actually been quite a lot of Bitcoin advocates celebrating the fact.
Well, yeah, it's a funny paradox, Dan, like all these things, because that's what people are against. And again, in terms of pure price appreciation, excited by institutional investors coming in, because the greatest idea would be that all huge vast numbers on their own retail investors wake up to what's going on and independently get Bitcoin and start transacting and using it as real money, and and that's where this is argument about investment vehicle versus actual utility of peer-to-peer use, and how much the supply will be controlled by big players. So yeah, there is this great paradox in it then, exactly,
Yeah.
of being excited, people being excited that BlackRock are getting involved.
Yeah, well, people forget that Bitcoin went from literally zero to $1 trillion in market cap with almost no institutional participation. The
Yeah.
reality is that. But now we've got institutions scrambling to get their share of the 21 million Bitcoin that will ever be in existence. So the retail investors, people like you and I, have actually had a head start to accumulate this, at least of what's been mined so far. But that 68%, like 60-70% of that quoted 68% hasn't moved. It's been relatively static. So now the big boys are coming in. I'm curious to witness what's going to happen to shake out. It's almost like shaking the money tree for the Bitcoin to come out. So
Yeah.
as things start to get a bit more bullish, I'm wondering, could we see almost like a false flag bull run, which causes, but then a panic event that causes a big sell-off? The retail investors start to sell off because of the fear of, the fear entering into the market again. Again, that money then trickling down into institutions. I think there's a variety of means that transference of wealth will occur. I think
totally that, because we saw it. I was discussing with a couple of friends of mine over lunch yesterday who were involved in the space themselves, and what we're talking about was what they often do, and it ties into your point you've made there, that those first early bull runs were much more organic, and you could see that in the shape of them. You look at the Bitcoin all-time chart; they're much more emotionally led in terms of the hype and the parabola and the drawdowns. So you could argue that was a much more organic journey. Far fewer people involved, but a far higher percentage of retail people involved, and very few institutions. Now, what often happens is that, and I think the big boys start manipulating this heavily, in 2021, because what they got people to believe was, we've seen 3 lovely cycles like that. We're on our way to the another one, and often what they do, I've seen this down in my own research, that often once you've realized a pattern of what's going on, the big boys will try and flip it. So they give you enough time to realize a pattern and think, I've got the pattern, and then they flip it. So often 3 times like that. The 4th one, that's where you had this kind of fake out, top of 64,000, which actually was the real top of the market. Okay. In I think that was April 21. Then we had this drawdown, and all the metrics show, and this gets quite technical, but a lot of the metrics show, even in terms of the metrics of how much interest there was, retail money, social interest on the internet, that actually that was the peak. But what they very cleverly did was they pushed it with their own money, the whales and the kind of insiders, pushed it kind of artificially just above that, used a lot of influencers to say, we're going all the way here to 100 grand. The number of people you'll have met who got fooled by that, thinking we're on our way there, and it just went over 64 into an all-time high. So what I'm saying is, that started to get more manipulated, and that's why I don't get attached to the cycles too strongly of what's gone before. Not because I'm not super bullish on the whole space. I absolutely am, for all the reasons we've talked about. This is going to be absolutely huge. But in terms of looking at how it's grown before that, we are in a different ballgame. And I think, the point you made there, Dan, what, to shake more people out or do that. But I think it's worth reminding. I always remind myself that, you exactly said there's a bit of a head start. I think it's a unique time in history.
Yeah.
It's a unique time in history where, as somebody today, who doesn't have to be a high value individual with accredited investor status, can be a venture capitalist in this space and actually be front running the big venture capitalists. Because the big venture capitalists, a lot of them cannot come in until regulation's fully there. They've got a lot of money on the sidelines, we know, and this is the beginning of seeing that. But actually, it's a unique time if you take the proactive steps. You actually can be front running the big boys on a lot of these really strong assets that are building ecosystems that can have huge use case across the world, across all industries. That's never happened before in our lifetimes. And that's also why they're shaking a lot of people in the market. And, we discussed it. There's many people who've left the market since 2021, got confused by that kind of fake bull trap of the 69,000. People get scared out the market. They get bored out the market, Dan. They get, distracted out the market. The people who stick and do the work understand this is worth, having a stake in and seeing where this goes. And I think, that's the uniqueness, that this is a window to actually, because as you know, in kind of traditional markets, the venture capitalists are able to get in very early, and we are extremely early. People often look at Bitcoin. Absolutely, Bitcoin's had, been around since 2008-9, had huge growth. Will probably continue to grow, but a lot of these other ones, haven't been on that growth cycle yet, and so we're super early. They've got a huge road to run, and this is a window where absolutely you can front run a lot of the venture capitalists, because what happens in traditional markets often is the venture capitalists have got hold of companies when they're minuscule, pump their money, build them up, and then they float on the market, available for you and I to go and buy. But what that really is they've made their 1000x, and they're dumping the stock on you, and then you might make a nice 20% return over the next year. So in a sense, they're in and out. Crypto is a window where actually we can be doing that. And I always argue, you could be doing that whatever level you're at. You could be doing that with 50 quid, and that's where I think getting playful with it also can help. That's particularly when we move in, Bitcoin, and this is another rabbit hole, but Bitcoin stands alone. We're looking at the altcoins, looking at investing. You can have fun, have a play around, because there are risks there, of course. It's uncharted territory, but the rewards that are on offer down the line in the growth can be extraordinary. And I think that's where it's interesting. We're in an interesting time frame, and you're absolutely right. A lot of this huge money is going to come to this market at some point. I've always said this, Dan. I don't get attached to I know it's coming. I don't get attached to trying to predict the exact roadmap on its way there. Could be very rocky, like you said. We could have more black swans, whatever. But that money is coming, no question.
Yeah.
That's the only certainty.
Yeah. So despite the kind of sentiment around the big money coming in, driving the price up, there is actually a lot of commentators saying that the reason we've seen this highly illiquid market for a period of time is because people just don't want to sell to Wall Street. So they want to preserve the ethos and value of what Bitcoin represents.
Totally.
But which I think is fantastic, and it's actually really elevated the kind of Bitcoin's dominance throughout this. And even despite all of this regulatory conversation around whether crypto assets are securities or not, the same people who are making those decisions and making those accusations have come out and said that Bitcoin's a commodity, so that it's not under the same regulatory pressure as some of the other assets. Bitcoin has been shown to be a safe haven so far. Its market dominance has escalated by over 10% since November last year. We've seen the value has surged by 74% in the last 6 months. So it's really, really, the markers are very positive. And
Dan, I'm glad you said all that, because I always have this conversation especially when I give talks in person, where that's not what the man in the street believes. I always say the numbers tell a different story, which is, again, because of volatility, and a lot of volatility, because it's a nascent and it's just a small market. But that's why I always tell that story that between a lot of people would view, if you're in crypto the last few years, since 2020, you've lost all your money. Whereas I always say, Bitcoin it's outperformed every asset, going, despite those drawdowns, despite the collapse of this, despite all this drama. And I think that's where it's important to get. We know that the news and media is so powerful, particularly to people who don't understand, the underlying take on what's really going on, and that's why it can be such a barrier to entry, kind of, Dan, and by design, because reality is, like you said there, an incredibly resilient asset, incredibly performing asset. This market's been incredible, and but if you just caught up in the most hype news cycles, you wouldn't have that sense, and that's why a lot of people are scared, whereas people who really understand it are often the opposite of that. But that's a really small number of people, because it takes time to get that grounding and get clear.
Yeah, and whilst we may oppose some of the things that are happening for principled or ethical or moral reasons, the reality is, as we've talked about countless times, is that this is all going to lead to widespread mass adoption via various means, not only for major institutions, but actually giving access to a much broader customer base. People, retail investors being able to come into the market, and that mainstream adoption offers a grander scale of long-term potential. But the purists' argument here is that the value of Bitcoin and what it represents will be eroded or distorted or manipulated, and I can see that. And the fears around that paving the way for centralized digital currencies, we touched on it previously, that actually, despite what Bitcoin offers, if it does become so dominant, it could indeed become the first global currency, and that in itself, global digital currency, centrally regulated and managed. There are massive risks to that as well. Who needs a central bank digital currency as a one world currency when you've got Bitcoin? The reality is that is a dystopian outcome that's rarely talked about, but it is a possibility. The reality is that it's often discounted because it's not issued by a central bank, but the means, the frameworks that are placed around it means that it can still operate as such a currency. But I suppose the wider monetary policy, traditional monetary policy mechanisms aren't as valid. That said, this week there was a paper released about a one world central bank digital currency that's being developed. We talked about in a previous episode how far advanced central bank digital currencies are. It's all interconnected, and I can see why people's fears are connected between Bitcoin and the prevalence of digital currencies. But there is a confluence of factors that will result into that outcome. And irrespective of that, if we take a more nuanced view on it, we even just on the technical side, we can see that there are real improvements in terms of I alluded to the SWIFT system as like a fax machine. If we look at it purely in practical sense, you're going to see speedier transactions, more efficient transactions. We're going to see a much more equitable marketplace. You're going to see third world countries having access to finance tools that they've never had before. It's going to help developing economies to advance far quicker than ever before. We'll see a convergence effect. And again, there's a whole social discussion around all of that, about what the increase an increase in wealth in the developing world would bring, particularly if it's come from outside funding sources and the loss of sovereignty and all that sort of stuff. We haven't got time to go into the depths of all that today. But there are lots of benefits to the evolving trajectory of all of this. But I, for one, as someone who is concerned about this trajectory of the world around the state of our freedoms and our privacies and the kind of censorship culture and the possible outcomes, the possible dystopian realities around this, I can very much see either trajectory playing out. But we must stop living as though everything is a foregone conclusion, that everything is premeditated. It may be one giant inside job, but the reality is we also have the potential, as you were talking about, is that we have the potential even to start our own funds, our own institutions. We can start to dilute the powers of BlackRock. And BlackRock, despite their facade of all their ESG manipulation, they're leading the charge of all this environmental, social governance stuff. The reality is, if you actually look at what they hold, what they fund, they fund many of the things that the kind of activists of today would be appalled at. And in fact, there's many different websites that point out, how many military, weapons manufacturers and pollutants that are funded by BlackRock. So the reality is, I think there's a big theme that comes through all of these conversations that I witness in the social space around this, and it's a relationship with power. And where we place an over-dominance of the level of power that individuals and institutions hold outside of ourselves, in a way, we start to put those institutions and individuals on a pedestal. And by doing so, we put ourselves in a pit and we diminish our own power. And there is a really interesting power dynamic playing out right now in every way. I mean, even I don't want to go down the rabbit hole of the OceanGate situation that's just been played out, and the sad, for me, it doesn't matter what financial status you have. There has to be some sort of shared humanity here. So, my thoughts go out to those who have lost their lives and their families. But the way people respond to rich people dying is fascinating. Because it says a lot about the state of humanity today. But that plays out in that power dynamic that we're talking about here. And I know that's a much more nuanced story. There's a lot of questions being asked about all of that. But I want to focus on the power dynamic and how we respond to others who have power and our own perception of our own power, because there's a difference between us having power over one's self and having dominion over others. So sovereignty is actually, the term sovereignty is actually in its roots about dominion, but it's dominion over oneself. That is sovereignty, not dominion over others. And there's a really interesting dynamic here. And the risk is looking outside and saying they are doing this or this is happening. we're never looking inside ourselves and saying, what can I do that could actually disrupt this? What can I do that plays a role?
Yeah.
Could I start my own investment fund? Could I challenge the incumbent power structures? Could I look at building something that is different? And because the old adage, if you can either knock down someone else's tower or you can build your own. It's I think there's so much to this conversation where it's about a mindset shift that's required.
Well, it ties. I'm thinking straight back to your discussing that survey, Dan, which was saying that there's a whole raft of people waiting for mum and dad to say, okay, it's safe to come in the water now. And that's changed their opinion. But that is exactly what you're talking about, which is, unfortunately, there are many people in that position where they're trading security for freedom. And like you said, the path we often talk about, I think we touched on it last week, and we're touching on it again, is that those solutions are not secure, and it's unknown, and it's pioneering. But that's where the change is, isn't it? I think this is the point. Change is full of the uncertainty and the insecure and going through tough times. Whereas what they want people to do is to be always grasping for safety. And I understand that they've engineered that from making people disempowered and scared. So therefore, problematic solution: get them scared, offer them safety. Whereas really the pioneering road to change is the uncertain path. Like I can't remember the quote, but you always start me from the wisdom of insecurity was a book I read. Was that, I don't know what's years ago, but that's the real wisdom is embracing the insecurity, isn't it? And what you're saying there, Dan, is these solutions there are, and again we talk about the purists attacking a move, and I'm with you. I'm deeply been investigating net neutrality for 15-20 years. For me, so much inside jobs, but that can almost become paralyzing.
Yes.
Because leads you go, there's no point making any moves. And I understand that mindset, but it's like, I want to be proactive, move and learn and pivot regardless. And say this example, like the argument always of, who created Bitcoin? Was it the inside job? Was it who knows, potentially. But if I still see options that are improving and I can use that and learn from that, that's me better than just going, I'm not doing anything because it might be tainted by the touch of us, the elites or that kind of stuff. That again, we talked about that kind of puritanical purist. If you found a way to be completely off grid and, extract yourself from everything and that's working for you, all power to you, all respect to you, and you're amazing. But, that's not where everyone's position is. Can you find a way of navigating? And like I said, I view, part of this crypto journey down is I'm learning. And I've spoken to people who've, talks who've loved learning about Bitcoin, whoever created it, however it came to be, because it's made them understand the fallacies of the monetary system. So that in itself was a positive, and it's leading to creative conversations. It's leading to us looking at options, and that's what I said. And however it plays out is not what we're dependent on, is it? As I'm sat here, or you're sat here, yes, I've got certain bias to where I'd like things to go more freedom-based, sovereign, but I'm going to miss wherever they go, and we're going to pivot whatever, aren't we? And I think that's what's really important. That again, it's cheesy, but it's the journey, and being on that journey and being in action and being curious along the way means, maybe some of these options I've got are actually going to help us, in the shorter term or next 5-10 years, to then have greater strength and greater foundations to build other things down the line. That's why I was looking at a long-term view, Dan. I don't view any of this as a leap to freedom. We're going to get there in 2 steps or this year, next year. But if we can increase our empowerment, our awareness, understanding of different tools, then we're increasing our chances of building greater stuff down the line with other people, each other. And I'm going on a bit of a treatise, Dan, but that's how I feel about this thing. I think it can be very simplistic of, like we've talked about, that's not perfect. There's an issue with that. There's an issue with everything. You can always find that issue, but I like to move the story forward and be curious at every step.
Yeah, I think the purest form of freedom that people may be seeking, people are seeking it outside themselves rather than within themselves, as though it's some thing that can be attained when the politicians change or the corporations dissolve or certain people die. I think it's chasing an illusion in a way. It's like the mirage, the pond of water in the desert that's not real. It's the shimmering on the horizon. It's really about, I think, the empowerment comes from finding a sense of inner freedom, in which case you can navigate the world with a greater sense of ease, recognizing that you have that sovereign self that's always available to you in any moment. And when we're caught up in the clown world, where the emotional roller coaster will take you on a journey between being fully in support of some, it's caricatured by I support the latest thing or I oppose the latest thing and nothing in between. That's where we start to find freedom, because if you look through the courses of history, even to the various early civilizations, and I too draw on the idea of ancient wisdom, but I think we overvalue ancient wisdom because we do it with such tinted glasses that we don't look at all the atrocities throughout history, the things that humankind used to do to one another within the context of that ancient wisdom. But if we look back to try and find the sense of truly free society that people almost are yearning for, we'll find ourselves lacking. What we need to look for is a way to decentralize the overt centralized, globally centralized power structures that we're facing today at every possible level. I touched upon the censorship industrial complex event I went to last night. It showed that there are hundreds of organizations working together around the world, from governments to non-profits to NGOs to private institutions to individuals, philanthropists, etc., curtailing free speech, controlling narratives, manipulating the flow of information. And this is just one sector, it's information. You look at education, you look at finance. We've had a slow sweep, slow boiling frog situation, which is now we've resulted into this very globalized, very central system. And that's why we're now feeling enslaved or encaged, because that is an almost inevitability of centralization. And that's the lesson that we've rarely learned through history. So a lot of these different forms of finance that we've been talking about, you often heard that if you're new to the market, DeFi, decentralized finance, it is about decentralizing this. And this conversation today has been about the big players coming in and preserving the central control of these things. But if we only focus on that, as we've talked about, then we miss all of the opportunities that we have to actually decentralize this, not to some utopian ideal where we are completely, free from government or institutions. It is a possibility for sure. I don't discount it fully, but in the absence of alternatives, in the absence of thinking about how we organize ourselves differently in the context of governments, or how we localize and create localized marketplaces that may or may not have digital currencies in the form that we've been talking about here, digital assets, until we start to realize that is the main problem, and that if we continue to give all our power away to those central institutions by saying this is what they are doing to us, rather than saying this is what I am doing today to change things, things will never change. So this to me is the greatest opportunity. It's the greatest opportunity of our lifetimes, in fact, to really think differently about the type of world we want to create. And by becoming puritanical and discounting this particular world, we're missing an entire opportunity. And I catch myself many times being pessimistic or a pessimist, a realist disguised, a pessimist disguised as a realist. But we have to be optimistic as well. We have to be creative, and this is a wonderful time to be alive. And the counter movement is building. It's building, and some of these tools and technologies we've talked about are part of that pathway forward.
Yeah, and I want to play with them and be creative. And exactly for me, Dan, it's going towards, we said people out of fear on suddenly getting caught in the old, but almost holding on to old paradigms, of control, even, staying within a certain system, and rather be moving forward and trying to understand different ways. And I think that people struggle again, wherever you are looking for security and clarity. There isn't a panacea. There isn't a one-step answer. All the solutions you're talking about and I'm thinking about, they are multiple steps. And I always try and think about, have I got more decentralized? Yes. The idea that I'm going to get decentralized about is kind of putting too much pressure on yourself and unrealistic? Have I improved it? Like for example, of do I want to be stuck, completely with all of my wealth in CBDCs, or do I want to have more options? Even though I'm not sure how those options play out, I'd rather have some. Rather than saying, "Oh God, I hate that. That's where they're going." Well, I'm going to leave all my wealth in them. I'm going to start diversifying into other options. Having some Bitcoin, having some other digital assets, having the self custody, because then it's like, I've got tools to navigate and different. It opens up different ideas and different possibilities, and you're absolutely right, Dan. And I think going back to that ancient wisdom thing, I think it's very easy because we weren't there. It's very easy to think about anything in rose tinder because it's an idea and we weren't there. I like to think, as my sort of intuition feels that, the human challenge in this realm is always been a challenge. It's just got different qualities to it in different ages. The qualities to it are different maybe from before, but it's still a potentially equal level of challenge, and that's perhaps what we're here for, getting super philosophical. But yeah, and it's almost like, as you said, there's that will to almost look for a way out, and I almost think actually it's a look to a way in, a way back in, because who do I love being around, and who do I feel adds value to me is the people who are most embodying themselves. And it goes, but I like it because a good example of your survey, Dan, is that with no criticism, those people, they are waiting for somebody else to say this is what you can do now. But what we're really looking for over a long period is more people saying, coming back to their own decision making based on their own things, and why they're going to do it. And it's a longer road, and it's learning, and it's the insecure way, but it is the way to solutions and change. And so yeah, again, we've got super philosophical, but we have to, don't we? Particularly with as the clown world ramps up and the ridiculous, and I think that's good. It does push one to the antithesis of that, which is what we want to be. We don't get sucked into that. We see it for what it is, and also we're rising to have better, real conversations with real worth, because there's so little real tangible worth in so much of that hyperbole that's out there and being pushed upon us, and like you said, spiking people's emotions, whatever. And it's exhausting without moving the story forward. And that's what it's about, moving the story forward, even if you've got no idea how it's going to play out, and being all right with that.
Yeah. Well, I want to, I suppose in our closing point on this, I want to touch upon that emotional roller coaster, because I was in London this morning, having been at the event in Westminster last night, ready to travel back to Bournemouth this morning. It was such a thought-provoking event. I was literally lying there at like 1:30 in the morning, still reflecting, thinking, I'm like, gosh, I got to get up early tomorrow. Got lots to do. So I woke up a little bit tired this morning, had an extra coffee. And as I was thinking about this episode, I was looking at the price movements of Bitcoin over the last couple of weeks. I've had this intuitive sense that now is a good time to put some more assets into Bitcoin. I haven't got any kind of strategy for putting regular funds in there at present. I do ad hoc investments. And I had that kind of over-caffeinated, emotional response to seeing the price movements of the last week and thinking, actually, yeah. And it goes into that short-term FOMO thinking, because the emotional roller coaster comes up. Long-term, yeah, what's the difference between buying it at 25 or 30 if long-term it is going to go to 100 plus or whatever it could go. So, the point is this, because what's happening already, I sensed it this morning in that sleep-deprived, over-caffeinated state, but there's actually a fear and greed index that you can find. If you search or you Google it, you'll find the fear and greed index for Bitcoin. And it swung from 47 last week. It's just go from 0 to 100. 47 is in the fear zone. It's more of the bearish, meaning that there are slightly more people looking to sell than buy. And it swung right into, I think 67, 60 something, 65, into the green, into that more greed orientated, where people start to get that sense of FOMO that I had this morning. And of course, now the noise is ramping up around potential bull runs. All the social commentators are jumping on. They're looking at, there's still this paradox of kind of SEC, as we've talked about, coming in with this, and then the big players coming in. As we've talked about, a lot of money is flowing into Bitcoin. The dominance is going up and up and up. So it's almost teetering on the potential for a bullish pattern, which of course is exactly when as soon as things start moving upward, people go, oh, I must do that. As I was feeling myself this morning, I had to ground myself and center myself.
Well, it's come back to your survey, Dan. It's like people waiting for everyone else, the consensus to go. It's okay and safe to go in now.
Now it's happening.
Right. Yeah. So again, it's like, the real point is, are you brave? And is getting your conviction is what's important. You don't need, the people who've never lost conviction, who bought a 15,000, 100% up already.
Yes.
Right.
Yes, that conviction is key, and that's self-confessed. I didn't have it the last 2 weeks. Other things are more important. It's like, well, you've got to make time for these things. So the reason I want to tell that story is because if we do see an upward trend now, that is exactly when people start to pile back in, and that energy starts to rise, and that's where people start to make poor decisions. So my plea to you watching this, if you've watched this today and thought, I really need to get around to looking at this properly and getting my head around what Dan and Sam have been talking about. In fact, I want to make my first investment. Then now's the time to really start looking, because everything we've talked about today, we've painted some potential realities long term. And we're at a certain point in history where some of those opportunities may change over time. Now is really the time to get educated, at least to get educated about the good, the bad, and the ugly of what this market entails, where it could go. And hopefully this podcast is helping you to do that. But we also have additional resources to help you that you may or not know about. We have a course called the Navigating Digital Assets course. It's a 3-part series. It takes you no more than 3 hours to go through in total. We've broken it down into short 5 to 10 minute videos that you can do step by step to really get your head around this marketplace, but also understand how to get your fiat currency, your pounds and dollars, into crypto. So that even if you, for fun, and you've got to enjoy the process, even if you just say, right, I'm going to take £10, $10, I'm going to buy £10 worth of Bitcoin. If you've got £10 spare, just buy £10 worth of Bitcoin. You've got literally, you'll only lose, what do you stand to lose? 10, even if it completely collapses, you'll only lose £10. And it's not going to completely collapse to zero. Let's be real. Okay, anything is possible, but it's highly unlikely. So now is the time to learn. So I would encourage you, if you haven't already, and you're looking for a holistic view on this topic and guidance to enter into the market, then have a look at the Navigating the Digital Assets course. You can go to weareelevate.org/reset. You'll find out about both of our programs that we have on offer. But don't wait until the FOMO really kicks in. Don't wait until the greed kicks in and everyone's jumping up and down. It's coming. That time will come. But we don't know what trajectory that will take things on. Now is the time to get educated. It's very easy to get caught up in the madness of the crowds when we're in the upward trend of a bull market. Do the responsible thing and think now before in the calm before the chaos. So.
Totally, Dan, and also that you do it's very important to get the real, which is obviously what we cover. Right? I give a holistic view as always. I always want to look at all the perspectives. I hope that's what I bring to this space. Is I'm not not a crypto moon boy, not a purist, whatever. I'm looking at it from a holistic point, which is why we have the discussions down as you do. Is that a certain level of practicalities are really important, so that you are secure, that you aren't going to get scammed, that you do it properly. Because sadly, over the last 3 years, I have had the unpleasure, but I'm glad I met them, helped them. People who have just done the old classic of Googled buy Bitcoin, the first 10 pages will be absolute scams. People have just sent money to people they never owned any Bitcoin. So just getting those fundamentals, it's not super complicated, but once you've understood it through that course, you literally can be set up very easily. And like you said, Dan, even if it's like a level of, I've got 20 quid, I want to have 20 quid for the Bitcoin before Blackrock, buy it all or buy as much as they can. They can't buy it all because those people hold it already. And if they do want to hold it, all your 20 quid will be worth a hell of a lot because they want it. But yeah, have some exposure and you understand the setup, because you're then ahead of the game and doing that work now, exactly what you said, Dan, before the hype comes. And again, we joke about it, but it's a serious thing that if your granny out of the blue phones you up to buy Bitcoin, it's probably because the market's going absolutely crazy and it's a good time to sell. But that's not when you want to come in and say, get me some Bitcoin. Also, if you're positioned there and you decide, actually, I've understood more, I've met more people, I've learned more, and I want to have a bit more exposure to crypto because I see the benefits in terms of having a decentralized asset in the growth, then you're ready to act as well, because you've set up your, what I call the ecosystem, Dan, but often it's just very simple elements, and you know your way in, you know where to store it, and you've got that. So you've got a grounding in, and I always say, bring some fun to it, and we talk about, the oh, the big boys manipulate. They manipulate every market.
Yes.
They always have, always will. That's what big money do. That's not just agendas. That's also greed. That's human stuff going on as well. But what's interesting? Why a lot of the big boys, big money come to this market? Because they don't want to be fully exposed to fiat currency either. You see, so it's important to understand. It's not. It's there's sense in a lot of what they're doing. They are, they use that term smart money.
Yes.
They understand the markets. I always tell that Ray Dalio story, Dan, when he was on Wall Street when it came off the gold standard, and he saw the asset prices go crazy because the smart man understands that, and we're in that situation now where currency is inflating, you're losing value, people are moving to the asset side of the equation, and digital assets is a new asset. Like we had commodities and gold and silver, they still exist, but that's also, they're not just moving this market to manipulate and make money. They are also, understand this is a place to store wealth and this is a growth area. So I always want to bring those, those perspectives in. That it may be like you want to be exposed to some different areas, and the fact you self custody it, great. You haven't got to put it in the bank. You've got some, and you've also got a decentralized form of exchanging. Should that you can cross borders with, that it's just jurisdictionless. I always tell those stories, Dan, and it's very important. Knowing that contact of a contact who was in Russia when it all kicked off. And he's locked out of his bank. In that when the war kicked off. He wanted to go to Poland, get across the border. He had no access to his fiat currency, locked out the system. But because he had some crypto, Bitcoin in a wallet, he was able to transact peer to peer. Because even if your friend's not in crypto, I could come to you, Dan, say you're completely new to it, and said we're really close. Say, mate, I just got some Bitcoin. I really need to get some cash to buy a car in the country. We can do that transaction. There's no one else involved in that transaction. There's no state saying, well, that's you, that you're in that country. So, a lot of those people in Russia got literally got sanctioned, didn't they? SWIFT systems down, they couldn't bank internationally. So having a form of an asset, you call it currency, like some of just assets, a means of exchange that is outside jurisdictions, outside borders, that you can cross borders with. You try and cross borders with lots of gold, lots of cash. That's getting harder and harder. So I think understanding those fundamental areas of what the whys, Dan, often piques people's interest to go, okay, that might be interesting just to have a little pot of, whether it's going to be a small pot or something might grow on. And I think, there are steps to take so you're positioned and you're ahead of the curve and ahead of the game. And then you're in a much more powerful position. And you've just increased your options already. You've put another string to your bow, as I like to say.
Yeah.
And I think that's really powerful.
Yeah, and over recent weeks on the show here, within this podcast, we endeavour to examine the kind of broader economic changes, but there has been quite a number of developments in this specific space that we're both interested in over the last few weeks. So that's why I kind of focus. But I think it's important to the point that you make around, we're not purists on this space. The reality is we've got to navigate the digital assets course. Of course, is focused on digital assets. That's what it's for. But our other program, the Navigating the Financial Reset, where we actually look at all asset classes. We're actually looking. We've looked at property, gold, bonds, stocks, because there are a whole range. We have a whole range of asset classes, and again, smart money, they diversify. And also throughout history, we're in now an inflationary period. Interest rates are rising. Okay, they've stalled for a little bit, but let's be honest, the Fed's probably going to increase the interest rates again, and other markets will as well. So it's about understanding what normally happens, because history shows us what cycles will present, and so there is a lot of kind of noise at the minute around this subject matter, the divided opinion. We've actually recorded an entire episode on that actually earlier on this. If you haven't seen the early episode, do check that out. But irrespective, this is a time to get educated, because let's be real, this isn't going to go away. So you can either stand by, and they always say there's three types of people. There's people that wonder what happened. There's people watch what happened, and there's people that make things happen. And it's you got to decide, what kind of person are you? And I think the more people that can step into, I'm someone who makes things happen, then you really are standing in your sovereignty. So that begins with awareness.
Totally.
Awareness leads to empowerment, and empowerment leads to action. And I think the more people...
And so much... Sorry, Dan, but the word that jumps out at me again is education, isn't it? Because I think we can get... we get very beholden to the agendas or whatever, but education, particularly in finance, is what means people thrive regardless of the economic conditions. It's about taking yourself... When you understand what's going on, then you can navigate and people can do well, because... I see it so much when I give financial reset talks that the energy is just of this complete fear we're going to be wiped out. Whereas, a financial reset or even a crash as we know, it doesn't disappear. It's a wealth transfer.
Yes.
It's always moving. And which side of the equation are you on? Where do you place yourself within that? So again, it's getting out of that victim mentality. It's getting out of that passive mentality of it's all being done to me. Well, again, how much are you tacitly or unconsciously consenting by not taking action, not learning? And again, I'm not making light of that. It's a challenge, isn't it? We've all got lots to do and lots of challenges on different work, but there is, I think it's important. There is so much we can do, and so much to improve our situation, and education is a key way out of it. Whether it's crypto or in the wider financial, spheres we talk about on the Navigate Financial Reset course, Dan, because there are lots of moves we make, which is what the top money did in 1971 when they understood what's happened to fiat currency after the gold standard shift. So it wasn't that they got screwed by it; they understood and made moves. So proactive and getting educated, and that just gives you more empowerment and more grounding, and that's what we're about. And I've always said it. I feel better by being in action and going towards these things and looking at them, rather than sitting in fear and inaction, which is where they want people. That's how they really get people, really, isn't it? Out of trapping them in fear and inaction.
Yeah, it's often said that knowledge is power, but knowledge is really potential power. It's knowledge plus action is where we get power. That's where we get wisdom. That's where we really learn. So, we can intellectually learn something, but we really learn through practical experience. And this is the time to yes, intellectually understand the situation, but it's also the time to practically understand the situation. And we do that by actually taking bold steps forward. So if you'd like our support on that journey, you can go to weareelevate.org/reset. You can find out about the two programs that we've mentioned. Now, this is an important subject. For those of you who are watching this worried about the kind of trajectory that the world is on right now, the kind of centralization of power, the corruption, the censorship, this conversation that we're having today needs to be had in more circles, because a lot of people are asking, what can we do? Well, understanding this part of the puzzle is vital. So if you know people in the freedom movement or people who are trying to make sense of what's happening in the world right now, trying to get through the grand narratives and agendas that we're witnessing, please do share this episode within your communities that you belong to, because it's really important that people get clued up on this. And I mean that. This is at the very minimum, start to gain an understanding. Even if you reject what's happening, or you disagree with it, or you don't want to subscribe to this kind of digital world, that's fine, but at least understand it. So please help us to share this content. And if you want to hear more from us, just hit the subscribe button. We're currently on YouTube. I know we've had massive issues of YouTube over the last 3 years. It will soon be available on Rumble and Odyssey as well, so look out for that. And if you prefer to listen on the move, I know we have these long-form, expansive conversations. You like to get it to your headphones. We're on Spotify, Apple, every major podcast, and every minor podcast platform. So whatever you listen to your audio podcasts on, look us up, the Uncharted Territory podcast, and subscribe there to make sure you get our latest episodes. We come at you once a week looking at what's happening in the world. So please do subscribe and share. We really appreciate your support and your listenership, your viewership. This is such an important period in history, and it's amazing to be navigating this uncharted territory alongside you, Sam, and all of our viewers and listeners.
Absolutely. We're all pioneers.
Indeed. Let's pioneer the way to a brighter future. All right. That's us over and out for today. Thanks so much for tuning in, and we'll see you on the next episode of the Uncharted Territory podcast.